If you're a passive real estate investor and you're looking for your next investment, you need to make sure that you feel comfortable with that investment. You're putting your hard earned money into a property and you're going to make sure that you're making a good return on that money. But what questions do you ask? When you're working with a general partner, someone that's leading that investment, there's so many different topics that you need to cover. And you're not the expert, but there are questions you can ask to make sure that you feel comfortable with this investment. So let's dive in. Now, these will get more advanced as we go through this video, just as we get deeper and deeper into the weeds. But initially, when you're talking to a general partner, you want to start very high level and really start by learning about themselves. Ask the general partner to tell them about their team. What's their experience level? Over the past 2 years, how many deals have you guys closed? What size were these deals? Do you have experience in this specific space? Are you surrounded by other people in this space that also have experience? Do you have boots on the ground? Are you going to be working with a contractor? Do they know the contractor? There's so many different types of questions to be asking, and the overall goal is that you're comfortable with them, their team, and their experience level. Another question series that you can be asking is about the overall property. To the general partner, why did you select this property to lead your investment? Is it the location? Is there a value add? Is there a type of dilapidated property there that you're going to be remodeling? There's so many different strategies and stories behind a specific investment property. And really, there's no right answer from a general partner standpoint. You just want to make sure that they have a thought out story and strategy as to why they purchased the property. Another question, this is a little tidbit that I love asking, is why did the existing seller sell that property? That's another important thing to get your mind wrapped around and understand the background and the history of that specific property. Another series of questions you'll want to make sure you definitely hit when you're talking to a general partner about your investment is, how much money am I going to make? It seems pretty obvious that this is a straightforward question, but really the nuance is in the general partner's response and how you follow up. You want to make sure that the general partner is hitting specific metrics when they're describing how much money you're going to make. Look for terms like internal rate of return, cash on cash. And just a quick plug, The Hill Bro Show, that's our YouTube channel. We do other in-depth videos on these specific metrics. But you want to make sure that the general partner truly has these numbers thought out and they're actually using the correct metrics, calculating them in the correct way, and they're able to portray them to you in ways that you understand and feel comfortable with the returns that you'll be making. And then also, how are they tracking this? What type of systems do they have in place to make sure that they're actually calculating the properties correctly and that the returns are going to be delivered to you and executed? Now we're talking accounting, bookkeeping, what type of staff they have, etc. So on to the next topic. How long is this investment? Seems like a straightforward answer, but in real estate investing, oftentimes that property and that investment, it's not liquid. So if you put that money in, you're not going to be able to pull it out immediately. And you want to make sure you have a detailed, thought out question and answer session with the general partner about their strategy and how long this investment is going to be. And then make sure it aligns with your investment strategy. Another very important series of questions to be asking is understanding the overall money-making strategy behind this investment. Is this a property that's going to be a value add? Say it's at 70% occupancy, and because of metric X, Y, and Z, we're going to get it up to 95. And through forced appreciation, we're going to be able to sell it at a much higher value. Or is this a cash flowing property? We're going to buy it, make a consistent return. It may not appreciate as much, but it's going to have just a great return for its investors and be a consistent cash hog. There is so many different strategies, and I don't want to get into the weeds about every single one, but I think the overarching theme here in these types of questions is to feel comfortable with the general partner's response and make sure that whatever strategy they do have, it is well thought out and they have an actual plan to execute on that strategy. Now that you have a good feel for the investor's overall strategy, you really want to take one more layer off that onion and you want to get into their risks. Every property does have risks, and you want to just make sure that you can mitigate those. And that can be done through questions like this. How long is your due diligence period? Every property has a due diligence period, and you want to make sure that for that size of property, it's long enough where they can get done everything they need to do. Go through all the existing books, numbers, get all of the existing contracts, get all the leases, make sure that you have an inspector go through that property in extreme detail, and you truly know that there's going to be no surprises when they're getting in there. On the contrary, most strategies are also looked at as risks, and you want to make sure that they are backed up by data. So in an example where a general partner plans to increase rents, make sure that they have surrounding data to prove that that's possible. Are there comps in the area that support that? Is there a book of rental data in that region that supports that information? And really just get a good feel for what type of data that general partner is looking at that supports those claims in that strategy. Another incredibly important part to this whole conversation is, in the end of the day, what is the exit strategy? How am I going to make all of my money back that I initially put into this? Yes, there's going to be returns along the way, but what is the exit strategy? Are you going to be selling the property? And if so, how is that going to go? What is the ideal customer for this type of property? Is it going to be an investment firm who's just looking for an easy property, fully working, that they can just step into? Or are you going to try and actually leave meat on the bone for another value-add investor to come in and invest in that property again? Is there going to be a refinance strategy? There's so many different parts to the exit that a lot of people don't get into with the general partner when they're getting into an actual property that you'll want to make sure are covered. And to that point too, this is something that always bugs me, is what is the exit cap rate? Really make sure you ask them. When they're running their numbers, they're going to make assumptions on what cap rate they'll be able to sell at once they're selling the property. And oftentimes those numbers are skewed. And the same real theory goes back to everything else. That exit cap rate, what is their story behind it? And what data do they have that backs up that story and strategy? So we've covered some good info here today. And I hope I'm leaving you raring and ready to go find that next great investment. But if I left you wanting more content, more details, and each one of these topics could truly be a 10-minute video on their own, go to our YouTube channel, The Hill Bro Show. Like and subscribe. And in there, we have some great information. Click on this link that's going to pop up here. This is our most detailed training for passive investors in real estate. And you should be able to find some real great info where we go through charts, all types of different people that can be investments, how to take money that you may think you can't invest with and actually invest with, and then little tidbits here and there throughout the course. So again, great talking with you. Hope you got a lot out of this. We'll see you next time.